So this is going to be a little scan, a little update, a little morning and kind of weekly recap of what's happened so far, and what my continued focus is going forward this week. So we obviously have, as I said, following a 3% breakdown from peak to trough, last Thursday highs to Friday lows, with a large gap left behind and a lot of imbalance that needs to be digested. We obviously have some late shorts trapped. I'm not really surprised that we see a 1.5% day put in yesterday, or on Monday. Sorry. I'm not really surprised that it's happening in the first initial week of Vanna Charm flows after the breakdown that we had from high to low of last week. And I'm not surprised that we're starting to kind of see that stall and potential seller show his hand, especially on the daily print at 632, right? All it is just understanding when the edge is vulnerable short side and when you can execute appropriately. And I personally saw the opportunity last Thursday for an intraday move, and I potentially can see the opportunity now. For me, a lot of it is just kind of understanding that there's a big reason, there's big relevance behind this happening into a certain window and why we're going to see. I obviously would have loved a gap down or a breakdown continuation lower, and we see some late sellers trapped that way, and then we get a push into the gap that we established on Friday. But it's not necessarily a surprise to me when we see such a massive move to see these kind of late bears trapped, right? Because we have the window opening up for the Vanna Charm flows to be a little bit more aggressive, more meaningful, I guess you could say. And we have a lot of people that are going to flip bearish off of this, right? When there's no real subsequent structure developed that's super, super vulnerable, at least coming into this week, short side. There's a massive bearish engulfing weekly candle backed by a lot of volume. There's a lot of red flags and then higher risk on in tech equity, financial sector being a big red flag as well. But there's not such an edge here coming into this week as far as continuation short side, unless you're trying to short the whole, which is a terrible idea. So obviously, coming into this week, cash on the shorter term perspective, the January positioning still being valid, but with the potential to see a little bit of a continuation lower and then this pop, which is what I wanted, or this, right, which now kind of puts us in a little bit of a tricky scenario, in my opinion. It's a little bit, I don't want to say confusing, it's a little bit more difficult of a short to time correctly. Because what I will say happens here is when we have this gap up, we have the kind of progressive reclaim of the Friday open. We now have this NWOG to deal with, and there's a lot of relevance behind this NWOG. There's a lot of relevance behind the $4 move that we established from closure on Friday to open on Monday, and that's going to hold a lot of weight, and that's an area where there's a lot of intent from a buyer, and there's going to be layer orders layered. There's going to be there's a lot of relevance behind that range, and we can't ignore that. This could, like I said, we look at the price action Monday. There was not necessarily a structurally sound buyer. There was passive selling going on throughout the entirety of the session, in my opinion. We never drew into the new week opening gap. We never had such a clean structure, and it was just kind of patiently waiting for that draw being to the full gap fill, and then if you want to pull your fibs as well, we had this kind of golden pocket being at that full gap fill. So that was kind of the draw Monday session, right? We had this relatively lower volume candle closing at the highs with the passive seller to start the week. We get the small minimalistic gap up. We see the seller and continued exhaustion from those bids and notable signs from a seller at the full gap fill, and then we get a really, really clean move of about 4 or 5 points, 5.5 points, from 8:45 to 9:45 within an hour. But then again, you have to understand that, I don't know, I personally like this short from the 630 to 632 range on like next week expiration, targeting the NWOG, targeting the full fill, and then potentially those new lows. I also understand that there's the potential for this to not break out to new lows, for us to find a buyer within this gap, for us to trade higher within this window of strength. And you have to execute accordingly. You know, if you take this short with, let's just go ahead and say you get your initial ads at 630, you're kind of risking that 632 spot. Low of day, I mean, you're still at a 2 R to R, 2.5 R to R to draw into the, you know, weekly open, 4.5 R to R at a breakdown to the weekly candle closure of last week. And then 7, and then if you want to take out these lows at 618, 6.5, and then you want to break down here to 8.81. So you just have to execute appropriately, right? You have to, in my opinion, at least, especially when we see this notable volume anomaly pour in at the low of day range. We see kind of a 5-minute structure develop. I think you have to appropriately trim with the, you know, target in mind being this gap, but also understanding that we're not necessarily in such a window where you can, I really can justify slamming the bi-weekly positioning, milking it. Yes, this could be, I mean, I think this is all a distribution since we broke out. I think we've been developing a range specifically since 626 on July 3rd highs, where we faded that on the 15th. So a really clean breakdown of about 8 points, and then continue to rally into the earnings reports on the 31st, catalyzing the gap and crap and 3% move. But this gap holds a lot of relevance, in my opinion, and you can't ignore that, right? Yes, this could be our last point of supply. When you think about this, to trade us back into the confines of this range that we had previously established in the highs of Q1 this year, yes, this could also not be. I think 626 is a big spot. I think if we see the draw further in the new week opening gap, it's going to be a pretty big tape to continue to read. It's going to be very important daily candle closure and hourly structure, because we could always wick it. We could reaccumulate within this gap and trade higher. We could break down. This buyer could bail. We could trade all the way to 613. It just depends. But I think that the short is justifiable. You have to execute appropriately. You have to target appropriately. And you know your objective risk at 632. This is a good trade with about $2 of risk for about $6 of reward when you think about, or $4 to $6 of reward when you think about your initial trims. But, you know, I'm already kind of seeing, there's a lot of things that factor into this, and I'm seeing a lot of red flags, but I'm seeing a lot of red flags that aren't necessarily red enough yet, which I'll discuss in a second. We have QQQ, same kind of structure, a little bit more volume backing this Tuesday print, and actually a pretty good long when you consider the fact that it was really just a base and break over 559, 558.83, which is with Friday closure, and the draw is going to be into this full gap fill, right? So a pretty good long actually. If you can focus on that and take this appropriately on this candle with an objective risk of 558. We find the higher low, continue to rally into the closure, and at this point, I mean, it's not necessarily worth another 90-cent move when you have theta to deal with. But we get the gap up the following day, the sweep of the Thursday closure, and then the failure over the Monday high as well is pretty pivotal. That's something that you have to pay attention to as well. If we can develop subsequent structure, this is an appealing short, I'm not going to lie. And I think we could take out these lows, but I also, you have to be a little bit realistic here, personally. But it's the same kind of thing. Right at the golden pocket, the exhaustion, this just had a little bit of a long opportunity developed on Monday, and we get the gap up and failure and continuation towards, potentially drawing into the NWOG. Same thing, if you're going to short this, you have about, $1 to $2 of risk. Your first initial target's 559, 554, 551, and then anything under that, I mean, it's kind of why I like SPY a little bit better, because we don't have, I mean, if you trade it from yesterday's high to the highs of this range that we had previously established, that's a 5% move, and if you look at SPY, that's just a 3% move, and it's a little bit cleaner and a more objective, and more structured chart, in my opinion. As far as building out a range and potential UTAD of this range being put in, this is a little bit more of a stall and exhaustion, but a float that's aggressively unstructured to some extent, if you can get kind of what I'm saying. But those July 3rd highs are pretty pivotal at 557-ish. I'm mainly just, if we end up sweeping the NWOG, it's going to be notable, and it's going to be something that I don't know. You just have to be a little bit patient on this. We have XLF. Originally, I wanted this full gap fill from the 24th. We kind of see the exhaustion and notable footprint, I guess you could say, on the Tuesday candle. But we have a gap to fill above. We have a gap to fill below, right? It's going to be something that just we have to take some time and let this develop before we can necessarily justify a short on this, right? If we can break down to 50.82, we can see a bid on financials. We know financials has the potential to build out a range, taking a little bit longer than the broader equity market, as we saw in Q1, right? As we saw this kind of develop a 3 higher high distribution into March, whereas from February OPEX into March, SPY was already down, 613 to 576, right? If you look at this, right? From February highs to March 3rd, we already down from 613 to 580. XLF was putting in a new high, and that ended up being our UTAD of this range. So it can take a little bit for financials to develop. If we can see breakdown, gap fill, and then this lower high put in, this is a justifiable short, especially if it happens into August of expiration or August OPEX and expiration, the 15th and the 20th respectively. That's my window where I think justifying the short side aggressiveness is a little bit more appealing, but where I also think that we can just see a better structure developed as far as clear risk to reward short side. You can't really justify shorting this without a full gap fill, and you can't really justify shorting this to sub 50 without this full gap being filled. So think little things like that, right? Mags, big weekly spot to fail at $58. The external weekly highs that we faded last week on this massive, massive footprint. We also still have the gap to deal with. Still don't have a ton of volume pouring in on this candle that we established yesterday. And we could end up fading this, sweeping the gap, pulling up to the full Friday gap fill, right? It could be something like that. It's all just dependent on what happens, and especially the timing. I can't justify it yet. XLE actually looks really nice. We're bidding this gap. We have kind of a lot of consolidation within this range, and a lot of individual names here kind of putting in, like, this is a really clean print on ZOM, taking out these lows. This is a good look, and a lot of consolidation and compression within this sector that can potentially run us a little aggressively on some underperformers specifically. I think XLE still can fill the full $94 gap. ZOM can fill the 119 gap, especially when we're seeing like a kind of climatic low like this put in, with an influx of volume following the report, having more volume than the earnings report itself at golden pocket range. That's a pretty big time level. We have CVX still has the gap to fill from the 3rd. Haven't even touched that. A lot of consolidation within this range. Not my favorite look. Same with Oxy. We still have the full gap to fill. These can outperform, especially if we continue to see sellers and a larger seller within the tech equity. And so ZOM would probably be a big focus of mine. VLO, ended up seeing the breakdown from that weekly inside bar earlier in July, and we're seeing the continuation lower, but nothing super notable yet, I will say. ConocoPhillips is pretty really compressed. I mean, we have 8 inside weeks potentially developing in the confines of an 11% candle that happened with ease into the report. So this can definitely spark something into the $100 range. This is not really, ZOM is probably a focus as far as just more appealing names, more liquid name within this sector, but there's not a lot of bad looks in the energy sector. It's just a sector that's going to take a little bit of time to get going, especially on an options position. This would kind of be a commons focus, if anything. But, I mean, you could definitely take, a $10 move. You could definitely get a 15 to 20% move if you just trade ERX. But buying some commons on ZOM here with like a $2 respective risk. We still have a gap to fill from the 9th into the 10th. I mean, you can get 10 to 11% move on commons here. with ease as long as you monitor like the higher time frame closure. I mean, this is all happening at a big time spot in the defense of a 7.5% weekly candle that happened that ended up stalling within this gap, and then we had to kind of reaccumulate, and we saw the exhaustion kind of develop. But we haven't. I mean, a lot of these sells are met with a lot of exhaustion from those sellers. Like this print on the 23rd, we see the subsequent exhaustion, the pop, the stall again, another capitulation, decent little leg into the report where we see a breakdown, and now kind of a climax being put in underneath these lows. So this is not a bad commons focus. This would just be a commons focus for the time being. ZOM is probably my favorite look as far as an energy name goes. ConocoPhillips, like I said, is very compressed and consolidated and can definitely be a performer. But XLE and ZOM, I mean, I don't mind longing ZOM commons on the longer term port, I guess you could say. Kind of into Q4 if this can outperform. But that's probably it for the energy sector. XLP, I haven't seen anything super appealing yet. SMH, I think a path of least resistance on SMH is developing through the July 2024 highs that we put in on this massive footprint candle. 283 is a big time spot. We broke out and we kind of have developed a distribution above this range. We see the initial attempt at a higher low, a gap up the following session, very aggressive climax and leg that, gets bid up on the 16th. Another kind of exhaustive 3-bar sequence into a breakdown on the 22nd, where we see this buyer show his hand once again. This is now the third subsequent daily candle. The fourth, if you count the 23rd, another weak rally on low diminishing volume and spreads. And the exhaustion in the last week's reports catalyzing I think this was a 7%, 6 to 7% move, 6.67, 6.12%. And now the fifth daily test happening on the first, and a pretty weak bid into a notable seller, and now the AMD report potentially catalyzing something. But we need a crack under 283, and I think that's going to be a big time catalyst for the broader market sell-off if this cracks under 283 and can stick. ARKK 7.3% weak last week. The highest volume. Wait, what? Hold on. Since that April bottom, pretty notable. Then we have a lot of these Mag 7 names. Like I said, Mags looks like shit. VIX, after a 50% pop from Thursday's low into Friday's high, I'm going to have some VIX compression. That's also a big factor when volatility spikes like that into a window of potential volatility compression. We're going to have this VIX digestion. It's just natural. It's just how these things move. The highest volume ever on uvxy on Friday. We're continuing to see highest volume ever, be put in on these names. It's pretty notable. We saw the highest volume initially ever put in on the 13th. Something big is brewing, and I think it's been developing since Q1 of last year. But it just takes time. We just have to wait. It's just a pretty appealing, 3-day consolidation on VIX. I mean, I know VIX is not like a technical analysis kind of thing, but that's pretty notable. We might see some continued compression into August for expiration though, so I wouldn't be surprised if that's the case personally, but we have to see how it develops. But this is something I'm keeping my eye on as far as volatility. Like I said, this futures chart is notable. The anomaly print we have on the Tuesday candle volume-wise at a pivotal point. Daily candle today is pretty pivotal. Like I said, though, you have to understand when the timing is really appropriate. And it's just not everything is there yet for me to really justify aggressively shorting on weekly or bi-weekly positioning. Not everything is there yet. It's there, but it's not so crazy that I'm really appealed by it. Potential lower high put in on Nvidia. We have a inside bar kind of developed on increased volume. Still have the new week opening gap to fill. Same kind of sequence on Meta with this gap up off the report. NWOG to deal with. notable kind of failure, green to red print yesterday, but not a lot of volume backing that. AMD down 5% off the report, which is a pretty clean short actually if you want to take that last week on this kind of parabolic rally into this exhaustive top and then subsequent stall at the highs and continuation into Friday. A potential lower high put in off of a big time spot at 177.55. 162.25 is a pretty big spot, being the peg from October of 2024. We'll have to see if we can get slippage beneath that. Apple offered a really nice Monday short off of the progression gap from the earnings report, where we faded from 205 down to 201. We just saw the breakout or the gap up, the rally into the kind of volume climax and really aggressive $1 move on this 5-minute candle. And then a subsequent lower high put in for what could be a pretty clean move in the NWOG 1.5% to 2%. And offered a really clean short actually on Monday. Just the progression gap at like golden pocket range, pretty basic stuff. Tesla is currently failing the progression gap from the report earlier in, or last week, a couple weeks ago. Microsoft put in that lower high yesterday. This was a decent looking short if you really look at this structure when we have the massive sell-off off the report, the lack of any structurally sound bid, break down that following Friday session, gap up Monday, and we continue to see that exhaustion, and it happens kind of at the 0.5 range, 0.5, and we see the kind of taking out of these internal lows and draw into the new week opening gap, fading that Friday high. Not a bad short, but I prefer SPY off the gap at a objective risk at 632. And then not really much about these two. Uber's a potential flush trade short side. This just kind of being a weekly distribution developing, in my opinion. Talked about that before. We have the exhaustion at the highs, the massive volume climaxes, and pretty appealing legs that come afterwards, and we have this failure within a bear gap that was a 4% daily breakdown, and then a kind of a weak pop Monday and Tuesday, another failure of that gap again on a daily perspective, and the potential for this to spark a decent leg to 85, and it's sitting kind of flat off the report, right? Something could cook here, just in terms of this lower high. We still have a gap to fill down here, 85.25. Something could cook on Uber, and this is something that I'm going to kind of be paying attention to this morning session. If we can see a flat open, if we can see, this kind of develop into a, like this could develop here, if I'm being honest. Like this, honestly, some slippage underneath 89, and we could revisit 87 to 85. Just in terms of the lower high and the kind of preliminary distributive signs of this chart. Palantir 7% candle. I mean, I wanted a bad closure with a notable footprint. We ended up getting it. Can't really do much about that. I still think this revisits 45. Phenomenal quarter, right? When you look at the macroeconomic perspective, whatever you want to say, of Palantir. But it has my thesis and perspective on this position has nothing to do with the financials of this company, but everything to do with the sentiment in the chart. I mean, you know how many people Palantir's up 200% from the lows in 2022. Honestly, 2023, right? No, 2022. 2,000%. I mean, God damn it, $6 to 170, and a lot of people off of a report like this are now flipping super, super bullish. And you look at what happened to the report in February. We saw the gap up, the 24% candle. We saw the continuation, and we saw the leg that stemmed off of that 50% cut in half. The rally now putting in 200% move. Failed to take out the year-to-date lows, failed to fill the gap that we put in on a 24% report in November, failed to retest the previous all-time highs from 2021. This is just when you see a good report like that, and you see a lot of people, I've seen a lot of people flip bullish on Palantir now after this report, and that is the human nature. And that is the way that these financial markets have moved for years and decades and centuries, where no matter what time frame you're dealing with, those hands are going to change. The uninformed party is going to be trapped. And, if you're buying Palantir at $173, I just think that's a terrible investment. I think that's a terrible buy. I think that there's a party selling you inventory ever since the 130 range and has been trapping you late for a move, after a move that sparked an aggressive rally, or not an aggressive rally, an aggressive amount of profit. We're going to have that profit taking occur, and all you've seen is that. You've seen aggressive legs, exhaustion from buyers, higher highs sold off. I mean, this was a 9% candle on the 27th, backed by a lot of volume, right? This was a 50% move in ease from February into March and April. It's just not a good look, and I haven't seen anything where I haven't wanted to trade this at all, period. But you have to understand the fact that when you have a good report like that and a lot of people flipping bullish on Palantir, it's just a perfect opportunity for the informed party to capitalize on a news and sentiment flip like this and offload their inventory for a 2,000% profit. I mean, it's just pretty simple human nature and how these financial markets have always moved. It's nothing new at all. It's just the same thing happening over and over again, just different price points, different time frames, different names. So that's my opinion on Palantir. Nothing's changed. No opportunity has been seen to me to long or short this name. That's the thing I feel like a lot of people don't get. You can have an idea and you can not even be wrong. You can just have a time frame and it hasn't happened yet. Like my short focus on SPY, I've been pretty short focused since May. I wasn't able to pivot long in May on some commons, which was my fault. I was pretty long focused in June. Wasn't really. This was when I started to kind of deteriorate as far as my performance, and I've been long focused mainly up here into July, and I haven't been wrong. This is a quarter three in the 2026 perspective, and when you really look at this, I mean, 7%, 6% from the June cold CPI print, and there hasn't been any opportunity above this range that has been appealing alongside. This was a clean long up back to 603. Anything other than that, I mean, there's signs the 23rd, and there were signs on like Nvidia within the June 16th NWOG. There was a lot of signs the 20th and the 23rd that we were going to see a long and some continuation to the upside, especially when there wasn't such an aggressive fall through on this seller. We had a gap to fill from the 6th. We had the window of strength into the quarterly expiration that occurred on the 30th. That kind of initially was a really exhaustive print. I haven't been wrong. I mean, yeah, we traded, 7 to 8% from the May highs. I caught a 3% short this day. I just mishandled my position, wasn't able to buy comments long on a name like AMD, things like that. 6% above the June highs out of a, 32, 33% rally. I haven't been wrong. I just haven't. I mean, there's been one, two long opportunities that really sparked out to me for some exposure, commons, or leverage, but a couple long opportunities on commons, but I haven't been wrong. Like, this has all made sense what's happening. And when that conviction is gone, then I'll be humble enough to admit that. I'll be able to say, I'm wrong. This is not a short anymore. But I still have conviction. I still have a thesis that I think is correct. I haven't seen anything to stray me away from that thesis as far as a short side into revisiting those gaps, revisiting those lows next year, in my opinion, which is nothing that I'd execute on, but things that I think can happen. It's just like that. Like, have an idea, understand your time frame, understand when the opportunity to trade that is, understand the vehicles behind that, and understand when your conviction and thesis is wrong. And when you're able to understand when you're right and wrong, you're able to execute appropriately. And as long as you have enough experience and a mental vault of of sequences developing that give you confidence and have given you, you've seen these opportunities, these same things happen over and over again, just on different names, you're able to have like a subconscious decision making where you don't even have to think. You know if you're right or wrong in an instant, right? Things like that. So I've been really wrong on that. Hood looks like shit. TSM looks like shit. This was a really aggressive break on a TSM yesterday. And this started off off the earnings gap. We faded this gap fill from the 28th last Thursday. Really clean leg after. Really weak and exhaustive bid yesterday or on Monday, and a 3% breakdown today. But we have this gap being broken into. We have a gap to fill above. No executable range on TSM, but this is definitely building up distribution at new highs. Little things like that. But we're going to probably see a buyer within this gap. We're going to probably see a draw up to 241. So there's that. UNH is still a long-term comments focus. McDonald's with a pretty nice beat off the report. Just something I'm watching to see if this can like hold something appealingly. I mean, this is a name that can definitely outperform. You can think about last summer, last late Q2, early quarter three, really just Q3 in general. Just the entirety of Q3, this outperformed into Q4. But there was like a good long opportunity of this report in August, right? And you remember what happened July and August on semiconductors and tech equity and things like that. So understanding that. So really nothing has changed. Really good long on QQQ on Monday if you wanted to take that progression gap reclaim, base and break on 558.83. Good Apple short, but just an NWOG. Good SPY short on like a bi-weekly position, but you have your objective risk at 632. You have your reward target at 626 to 621. You can potentially milk this, but be very cautious with that. And same thing goes with QQQ. That's my only focus going forward now. Obviously, the January position is there. I still think it's very vulnerable overall. But I wouldn't justify getting super aggressive yet until we see like an attempt to break into this range, a sweep of it, and then a really notable lower high put in, and that's when you can really get some more exposure. But I'm still short. I still think we probably revisit 564 later this year. That's only like a 10% move, 11.7% move from highs to lows. And it's a big time spot. But I think this could get a little bit more aggressive post August expiration, personally. So maybe even into October. I think we could potentially see a trade back in this range in September, maybe down to 600. We can see that end of quarter flow kick in into a lower high put in into October, and then a breakdown into November, December, maybe revisit 564 to 580, where we see those quarter four flows kick in and a lower high established. Volatility is going to be something I watch. I don't really want a big vol event because that's going to create a change of hands and a reversion trade. I want a stair step down with a internal structure to play and then a macro structure to play in the next year. So that's my focus. But I mean, yeah, like nothing has changed really. I do like energy commons. This 84 spot's pretty big. If you want a long SOM or XLE, that's not bad. If you want a long ERX, that's a 15 to 20% move back into this gap. This is pretty compressed and consolidated in a sector that will outperform. But ZOM is probably my look here. Commons on ZOM with about a $2 risk to $11 reward is not a bad look. To an $8 to $11 reward, it's not a bad look here on the longer term port. I mean, not a longer term trade. I think this probably happens within a month or two. But just as far as like waiting for an options opportunity that really looks good. That's really my main focus. A lot of these energy names have a little bit more room to go, and we're now finally kind of seeing some promising looks on them, on a good amount of them. On like the oxy exhaustion, we have a report today after hours. But ZOM is really the most appealing one, just because we're kind of taking out these lows and putting in a really clean footprint. A lot of financials look pretty bad, failing within the gaps that we established on Friday, but can't really justify executing on these yet. I think this is going to be something I kind of take a look at later this quarter into September. But like really weak pops, notable kind of anomalies or a larger seller on the print yesterday. But we have not really seen much of an opportunity to execute on these for my edge just yet on options. Berkshire Hathaway 5%, 3% candle off the report though. It's pretty interesting. But yeah, pretty much it. Nothing has really changed. Just a quick little update on the opportunities we see Monday and Tuesday as far as the Monday Apple short and QQQ long, and then the Monday and the Tuesday short off the gap fill from Friday, and the potential for the full NWOG. And just still waiting for that January position. So good luck, have fun, stay cautious within this window.